Hi everyone, hope you guys do good. So let's get into question 2 on chapter 2 for cost behavior analysis. So guys, after you complete question 1, where we divide up the product and period cost and calculating the cost per unit, now we're basically taking what we did in the previous question, but putting it on steroids. Okay, so don't you just love when that happens? You feel confident, you're feeling good after the first question, and the second question gets even worse? Well, welcome to the club. All right, that's COM 305 for you. Okay, so let's read through this, get after it. Okay, now Bob Company is a metal and wood cutting manufacturer selling products to the home construction market. Considering the following data for the current year, all cost activity levels are based on the production sales of 300,000 units. Okay, so overall, guys, we actually already have our table set up for us here, which is kind of nice. And low key, I did that by design because I wanted to be a little more organized in the previous question. Okay, so all we're gonna do, guys, is basically fill this in as we go. But let's go read the required. So we see all our costs over here. We see the amounts, and then, guys, we see our, well, let's say it like this. We see direct materials, direct labor, overhead, period. And then we also see if the costs are variable and fixed. Okay, so let's go look at the required now. So for the required, complete the table above by indicating whether each cost is DM, DL, overhead, or period. Okay, so guys, that's why I have this line here, that divider. That's basically what I was about to explain earlier. So look at this here. First, we have to say if the cost is DM, DL, or overhead. So basically, we have to see if it's a product cost or if it's a period cost. And then after that, guys, once we're done filling this in, right, whether it's product or period, right, because this side basically says product versus period. Another important part of the chapter, guys, is actually determine the cost is variable or fixed. That's why I have this thick line over here, because we first determine product or period, and then we have to see if it's variable or fixed. Okay, so that's the first thing. Then for required B, we're going to prepare a COGM schedule and income statement. Then we're going to calculate the prime and conversion costs. And last but not least, guys, we're going to do a bit of cost estimation here. And it's pretty tricky, but it's something that you need to know for your midterm. Okay, cost estimation. Sorry, my handwriting is very bad. Okay, let's see. I was almost going to say it's very bad today, but that would be a lie. It's been very bad forever for many years. I'm basically a lost cause when it comes to calligraphy. Or right, you know what? Let's not even say calligraphy. That's too fancy of a word for me. Cost estimate, it's basically my handwriting sucks. All right, let's just put it that way. I'm good at accounting, but handwriting, not so much. That's why I'm very happy my life is on Excel. Okay, so guys, without further ado, I'm actually going to take this here, and because I'm on an iPad, I'm going to copy it into our notes. But if you don't have an iPad, which I completely understand, Apple knows how to take money from people. All right, just kind of note it down quickly. You could put like point 1, 2, 3, whatever it is, and just follow along. Don't waste your time writing out all this in full. It's going to take you too long. Okay, so first off, guys, let's go determine if the cost is product or period, and then maybe afterwards we'll do variable or fixed. Okay, well, not maybe afterwards. We're going to do it. Okay, so first off, understanding the business here, guys. We're a metal and wood cutting manufacturer. Okay, so looking at this first item, sandpaper. Okay, now you have to ask yourself first off, sandpaper, is it a product cost or a period cost? Okay, so remember, guys, you determine if it's product or period, and then if it's product, right, you need to look, is it DM, DL, or overhead, right? So is the cost related to making the product or selling the product? Okay, now, for questions, guys, at COM 305, for all intents and purposes, they usually tell you DM and DL very obviously, okay, DM and DL very obviously, but then the trickier part, guys, is determining if something is either MOH or if it's period. Okay, now let me just basically explain what I mean by that. All right, now for DMDL, right, like I said before, they basically give it to you very obviously. And if we're just kind of like skip ahead for a bit just to kind of illustrate my point, they tell us DM and DL, right? They tell us it very obviously. But so basically what I'm trying to say here, guys, is that the battle is determined if something is overhead or period. Because what you guys will notice that overhead costs and period costs, right? They aren't directly involved in production, right? Overhead costs are factory related, but they don't go directly into each product. The same can be said for period costs, right? Period costs, obviously, it's related to selling, has nothing to do with making, so it's not involved directly in the end product, right? So what you need to basically look for in the question here for costs that aren't DM or DL, right? Because your battle, guys, like I said, it's not DM, DL. It's determining, well, is this overhead or is this period? Okay. That's what you're basically looking out for when you're breaking up the product versus period costs, right? DM and DL is always given very obviously. The battle is between overhead versus period, okay? Now, when you're looking at these items here, because this is what I was trying to allude to earlier, okay? Looking at these items here, let's actually get rid of DL. Let me just highlight DL back because it's part of the DL zone. It's basically these over here, Okay, we basically have to see for all these other random costs that are not DMDL, is it overhead or is it period? Okay, and you guys remember the trick. How could I tell if something is overhead or period? Okay, we look at the wording, right? Because we have to see the only difference between overhead and period, because these are both indirectly involved in production, right? Because overhead, the only difference is overhead is related to production, and then periods relate to selling. Okay, so basically, guys, these are both indirectly involved, not in production, right? These are both indirectly involved. These are both indirect costs. Let's say it like that. Okay. The only difference is that overhead is production based, and then period costs are selling based. Okay. So, guys, now for our shortcut. Remember, guys, it's related to production if you see the word factory, and then it's selling if you see the word store or office. Okay. So understanding that, guys, let's just go get after it and let's break up all these costs. Okay. Because it's a little bit trickier than the previous question we did. But like I said, guys, I hope this trick helps you. That DM and DL is given to you very obviously. The real battle is between overhead or period. Okay. So, and guys, if anything I said just now doesn't make sense, don't be shy to even like comment on the video or just, send me a message. All right. Happy to help. Okay. So overhead. So DMDL given obviously, overhead versus period, this is your battle, and then you use your keywords, right? So factory, right? Remember, I make things out of a factory, so overhead production. Okay, sorry, factory production. I make things out of a factory, and then guys, I sell things out of a store. Okay, that's the rationale. I make things out of a factory, I sell anything out of a store. Okay, so factory. If I see factory, it becomes overhead. If I see store or office, it becomes period. Now, getting after this, guys, sandpaper. Okay, now for sandpaper, everyone. Okay. We basically have to see here, is it overhead or is it period? Now, if you're maybe wondering in the first place, well, Matthew, why wouldn't sandpaper be direct material? Well, guys, if you're making products for the home construction market, you're not making like sandpaper is not something you see on the end product, right? Sandpaper is something you use maybe to like refine the product, right? It's a piece of paper that you go and make sure everything's nice and smooth. So it's something you need to make the product, but sandpaper isn't actually on the end product itself. So if you weren't convinced, guys, sandpaper is related to production. Okay. So it's a production cost, but it's not DM, right? Because it's not on the final product. It's something that we use to furnish the material, right? To make sure it's smooth. Therefore, guys, it is manufacturing overhead. So I'm going to put 25,000. The amount is actually make the pen a little less thick over here. So 25,000. That is manufacturing overhead. Okay, sandpaper, it's a production cost. It's not DM because it doesn't go on the end product itself, right? If we're selling metal and wood products, sandpaper is used to refine that material, right? It's not actually the material that goes on the end product, okay? Now, next up, is it variable or fixed? Well, sandpaper, guys, okay, it's an indirect cost, right? It's overhead. And in my opinion, it is variable. The reason why, guys, is obviously the more material you'll use, the more that will get sanded. Therefore, it's going to scale with production volume. Okay, so remember, guys, a variable cost is a cost that changes with output. So variable cost, VC, costs that change with output. All right, so the key word output means if you make more or less. So it changes when you make more or less, right? Whereas fixed costs, just so you guys understand, costs that do not, and let's underline that, change with output. Okay, so fixed cost, guys, it's fixed. It does not move. So whether you make more or less, it does not move. Okay, so in my opinion, guys, sandpaper is variable because the more you want to make, the more that you'll end up sanding down. Therefore, it's going to vary with production and sale levels. Okay, next, material handling costs. Okay, so guys, material handling. Maybe you're confused, like Matthew, material handling got to be direct materials. Guys, that's not what material handling is. Material handling is just basically all the costs you incur from moving material from one area of your factory to another, right? That could be anything from like managing a forklift, right? Or like it could be people, hopefully it's not people carrying thousands of pounds of boxes. I pray for their doctors, especially in Canada, hard to see a doctor. But needless to say, guys, material handling costs are simply just the cost. It could be labor related, it could be, machinery based. It's basically the idea of moving material from one area of the factory to another, right? Probably from like the warehouse section of the factory to the production line, right? So since they are just moving costs, it actually falls under overhead. So we're going to put here 70,000. I hope you guys are convinced, by the way, material handling, that's like a selling cost, right? It's literally just before production, you move material. Maybe it's like, if let's just say something frozen, right? Like you take it out of the freezer, you put it on the production line. Okay. And guys, material handling is going to be variable because the more that the business is going to make, the more material they'll end up moving. Therefore, it's going to vary to some extent. Okay. Next, lubricants and coolants. I hope you guys also agree that that is production based. So material handling is for production. Lubricants and coolants. This is also for production. Okay. And what is a lubricant and a coolant? It just basically cools down the machine so it doesn't burst into flames. All right. Because no one wants that when they're at work. All right. Maybe if you worked in the Arctic, maybe you wouldn't mind a few flames. But other than that, guys, lubricants and coolants just make sure the machines run properly, right? This is not a selling cost. All right. So don't worry. Let's put 5,000 here as overhead. Okay. And I'm also going to put it as variable, right? Because the more you'll make, the more the machines will run. Therefore, guys, the more you make, the more machine, the more you'll use because the machines will be running longer. Therefore, it will vary. Okay. And those of you who are wondering, maybe freak out right now, but like, Matthew, I know literally nothing about manufacturing. I'm just a GMSB student. How was I supposed to know that? Guys, you learn as you go. You learn, you make a mistake, you cry, you repeat. That's all it is, guys. Okay. So next, miscellaneous indirect labor. Okay, so guys, the good thing is here, miscellaneous indirect manufacturing labor. So they already tell you it's manufacturing. And guys, the key word here, indirect. All right, indirect labor. We know from the theory video, indirect labor is overhead. So I'm gonna put 40,000 here. Okay. And then guys, indirect labor, it falls under variable because it's miscellaneous. Okay, so it's basically work that, let's just say it like this. Miscellaneous indirect labor is sort of just work that's done around the factory for the purposes of overall production, right? It could be anything from like a storage clerk, right? So someone who literally is hired to store items, right? So the more you make, the more it'll scale with, the more you end up storing or whatever it is, the more it'll go up, and the less you do, the less it'll, that's what variable cost is. So basically that's what I'm trying to say here. Miscellaneous indirect manufacturing labor. It is a variable cost because it's kind of miscellaneous work, and the more you make, the more miscellaneous work there will be. Okay, so if you're wondering why would it ever be a fixed cost, guys? Generally speaking, guys, and I think we'll get into this a little bit later, right? Or in our multiple choice much later on. Okay, guys, usually you could tell an indirect labor cost is fixed if they mention like salaried. Okay, so when you see because the big thing is, guys, for wages, and I'll just tell you this right now. Sorry if I go on tangents, but just so you guys understand, salary based, if anything is salary based, that means it's like you sign a contract for a fixed amount that you make every year. So it's fixed, right? Whereas if you just see miscellaneous wages, right, these are like more low level employees, right? So low level employees aren't really contract based, but they're actually per hour, right? So maybe you sign a higher, maybe you sign an agreement if you're paid hourly, but miscellaneous wages, it's paid per hour. That's why we say it's variable, because it's less, like, generally speaking, guys, like bigger positions in a company will be fixed because they're going to be salaries. Think about like big positions, and let's put it like this. This is a little trick for you. Big positions will be fixed, whereas smaller positions are variable, right? Think about it, like a CFO, right? They're not going to be paid by the hour, right? They're paid like by a set amount every year. It's going to be a fixed amount, then they'll get bonuses, right? Whereas miscellaneous wages, like low level employees, they're going to be paid by the hour, so that's variable. Okay, I hope that kind of makes sense to everyone. Sorry for the previous rant, all right, about miscellaneous labor. They're just kind of doing things around the factory. I think this is the way to explain it. Okay, there we go. Okay, next, direct labor. All right, direct labor. If you're wondering what column that goes in, you kind of need some glasses or a little health check. And then direct labor, guys, is obviously falls under direct labor for a product cost. Okay. And then, guys, it's going to go under a variable cost as well, because the more you want to make, the more labor workers you'll need. Okay. Next, factory leasing cost. Okay. So, guys, factory leasing, is that a period cost? So, is that related to production or is that related to sales? Okay. Now, guys, a lease cost. Okay. When you see leasing, that's basically like, you're renting a building, right? Leasing and renting, it's pretty similar. Okay. Obviously, there's legal differences, but for all intents and purposes, guys, lease is like rent, right? You have a lease. Okay. Now, is this lease related to production or selling? Well, guys, remember the key word here. The key word is factory. Remember, I make things out of a factory and I sell things out of my store or office. So factory, it's production. So is going to fall under overhead here. Okay, this is obviously not DM or DL. Okay, now next up, the 54,000, is it variable or fixed? Guys, a lease is an amount that you pay every month, okay, till the lease ends. So therefore, it is fixed. Okay, guys, leases are fixed. Okay, leases, fixed cost. All right, just so you guys understand, a lease is like the same amount you pay every month. All right, and don't worry, guys, there'll be no like mixed cost with leases. You're not going to get anything like too complex, too in depth, where you're like, oh, you have a fixed leased amount, then but there could be a variable portion. Like you see some of those crazy leases in the real world. Guys, remember, school kind of simplifies everything to that respect. So for a lease, guys, assume it's a fixed cost because you pay the same amount every month until the lease is expired. Okay, there is no variable leasing here. Okay, we're not dealing with crazy stuff like that. Okay, next, corporate admin salaries. Okay, a little bit tricky here. Okay, now for the corporate admin, okay, first off, is it a product cost under DM, DL overhead, or is it a period cost? Okay, now, guys, corporate admin. Okay, do you think that's related to production or selling? Because remember, guys, we see if it's product or period first, right? Now, if you were to tell me, Matthew, corporate, okay, corporate, that for me, guys, a corporate admin worker, okay, is a period cost. It is period. It is related to selling your product, right? Corporate employees aren't in the manufacturing plant. Corporate employees operate out of the office spaces in the sales buildings, okay? A corporate employee is not a manufacturing employee. They are two different things, okay? So corporate admin salaries, okay? Corporate admin, that is a period cost, so we're going to put it under here. Okay, for the period column. And guys, for all intents and purposes, when you see anything administrative, okay, any admin costs are associated with period expenses for the purposes of Com 305. Okay, because administrative usually technically, if we're talking the real world, and sorry if I'm confusing you a bit, but this is what happens when you talk to yourself to a camera. But basically, talking to myself here, I'm just talking to the screen. But basically, guys, for administrative, okay, administrative, for all intents and purposes, guys, it's period because you administer, well, actually, just let me say it like this. For admin salaries, guys, in general, for Com 305, it's just always a period cost, all right? In the real world, there's such thing as corporate overhead or administrative overhead. That is a term, but you don't see that for Com 305. So when you see admin, okay, assume it's a period cost for Com 305, right? You administer the sales process, all right? That's just how it is. So if you see admin, just assume it's period, okay? I know it's not the best explanation, guys, but it is what it is, okay? So whenever you see admin, let's add that to the list. Admin, it is a period cost, PE, all right? Admin overhead, it is a thing, guys. Administrative overhead, like you could be an administrative worker working in the factory, but for all intents and purposes, guys, for Com 305, whenever you see admin, you assume it's a period cost. Okay? Unless it said like administrative MOH. Then you would know it's overhead because it literally has the word MOH in it. Okay, next. Property taxes on the factory equipment. Okay? Oh, actually, first off, guys, for corporate, it's going to be a fixed cost for corporate admin salaries. Okay? And the reason why, guys, it's fixed is because a salary is a fixed amount you pay to the employee. Like I said earlier, okay, salaries are fixed costs. If you're paid per hour, it's variable. Okay, next, property tax on factory equipment. So guys, factory, we know it's going to be a product cost because it's related to making your product. And guys, property taxes is not DM or DL. So I'm going to put the 4,000 here under overhead. Okay, next, property taxes. Is it variable or fixed? Now, some of you are going to think, well, Matthew, property tax must be variable. It is not. It's actually a fixed cost, right? Because if you guys don't know how property taxes work, property taxes are paid per square foot of the property. So unless you have a magical property that grows and declines every day, right, based on units produced, which is literally impossible, right, then it would be variable, okay? But needless to say, guys, it is a fixed cost because it's based on the square footage of the property, which does not move, okay, based on units produced. Because remember, guys, a variable cost is a cost that changes with output, right? It's changes based on production, all right? Just because, guys, your tax bill changes another year, right? Let's just say the tax bill for 1 year is 5,000, and then next year, the government sucks, they increase the rate, and it's 10,000 next year. That doesn't make it a variable cost, right? A variable cost is a cost that changes because you literally make more or less. It's not because the government just decides to increase the cost that makes it variable, okay? A variable is a cost that's based on output, whether you make more or less. since the property taxes doesn't change based on your units produced, all right, it is a fixed cost. Okay. Next, fire insurance, same thing. Fire insurance now, okay, is related to production or selling. Well, since it's fire insurance related to the factory, product, and then it's fixed as well. It's not based on production. Next, DM used. It literally says DM used, so I'm putting 460 here. Okay, and then I'm going to put here under the variable column as well. Because, guys, material is a variable cost, because the more you want to make, the more material you will need. Next, sales commissions. So, guys, sales commissions, is that a product cost or period cost? Well, sales commissions, guys, is a period cost, right? Because it's literally related to selling, and it's variable. Because, guys, your sales commissions is going to change based on the amount of units you sell, right? So since sales commissions is unit-based, right? Because the more that your employees sell, the more you have to pay them, all right? That's going to vary based on your units sold. So it changes on output, right? So remember, any variable cost is a cost that changes on output. Since the amount that you sell changes every period, right? It is variable, okay? Next, marketing salaries. Okay, now, marketing salaries. Guys, marketing is related to selling the product. I hope we agree. It's related to selling, therefore it is a period cost. Next, is it variable or fixed? What do you think? Right? I hope you understand. By seeing the keyword here, it's a salary, right? Salary, guys. Do salaries change, or is it the same amount every year, right? Or is it, sorry, not the same amount every year. Let's say it like this. It's the same amount respective of what you produce, okay? Now, as you can probably guess, guys, salaries are fixed. They don't change based on production, right? If you work more hours to produce more or to try to sell more, your salary is not going to change, right? And if you don't believe me, you know, my fellow accountants out there, learn what KPMG and the Big Four is like, right? You want to make more sales to audit clients, right? Are you making more money? God, no, you're salaried. You're not making anything more if you sell more, okay? Next, depreciation on sales equipment. Now, guys, depreciation. A lot of you are just going to be like, well, depreciation must be overhead. No, because guys, you could have depreciation related to your factory, or you could have depreciation related to your store or office, which will make it a period cost. Now, guys, since the sales equipment is depreciating, is it going to be overhead? So is it product or is it period? Okay, well, guys, it's going to be a period cost. Okay, it's related to selling. So depreciation is related to selling. Therefore, it is a period cost. And then, guys, depreciation, variable or fixed. Well, depreciation, guys, will be a fixed cost. All right, and I'll tell you why. Because in Com 217 or Com 216, whatever numbers they change, God knows all the different numbers for the class now. 217, basically your intro to financial accounting. Okay, whatever number is of this class, because they change it constantly. You learned about different depreciation methods. I think it's been a good like 7 or 8 years, I think, since I've taken that class. But basically, guys, you learned about straight line depreciation. I'm going to write here SL depreciation, straight line, which basically means it's the same depreciation expense every year. You basically depreciate the asset every year the same amount till it's worth nothing, right? That's what straight line depreciation is. It basically goes, the equipment loses value in a straight line, the same amount year 1, 2, 3, and 4. Okay, however many years it is. So straight line depreciation means you depreciate the asset by the same amount every year. And there were other methods I believe you learned in 217, like double decline and units of depreciation method. Guys, you don't need to know any of that. Just for all intents and purposes, guys, for Com 305, whenever you see depreciation, you always assume straight line. Okay, so Com 305, depreciation expense, always, okay, always straight line. Okay, always straight line. And guys, because straight line means it's the same depreciation every year, it doesn't change based on output. It's always a fixed cost. And guys, you're going to need to remember this for chapter 6. Because guys, chapter 6 is like the intro to all the final material. And it's really when you're looking at variable costs and fixed costs much more in depth. And you guys will maybe see depreciation sometimes. And I don't want you to get confused then. Remember, you see depreciation, it is a fixed cost in Com 305 by default. Okay, because you depreciate straight line. So I'm going to write here, straight line. Okay, which basically means the same amount every year, so it's fixed. So depreciation now on production equipment. Okay, guys, so production, is that related to making or selling? Well, guys, production is just another word for making, so it's going to fall under overhead because production, no, when your equipment depreciates, that I hope everyone agrees that's not DM or DL. Okay, and then, guys, depreciation, always a fixed cost. Okay, and just like that, guys, now 25 minutes in, we are now done dividing up the costs. All right, so now let's go get totals here. Let's do totals for each because they'll help us a little bit later. 460 for DM, 300 for DL, 230 for MOH, okay, 330 for period. It is 960 for variable costs, and it is 360 for fixed cost. Okay, now my handwriting is bad here. I want to make sure I wrote the right thing everywhere. I hope there are no typos. Regardless, these bottom numbers are okay. All right, we are good to go. All right. So guys, hopefully that was okay with everyone for dividing up the variable and fixed costs. Like I said, if there's ever anything, don't be afraid to comment or just shoot me a message. Okay. Although guys, I think a comment would be good. That way multiple people see it because I'm sure a lot of you have the same questions. All right. It's good. You guys build up off each other. Yes, it's me getting mauled. Like if you guys build on each other's questions, I feel like I'm getting crushed, but it's better that way. That way you guys all get the questions you want out of the way, right? And a lot of times when someone asks one question, someone asks a really good follow-up. That's why in general, like I prefer public questions. I'm still going to answer every single question in private if you message me. I understand the want for privacy, but in general, I'm saying, guys, public questions are really good because then people build on it, and then you overall, as a group, build a greater understanding. So either way, public or private, I got you is what I'm trying to say. All right, I'm just trying to advocate for public group questions as well. Okay, now that's required A, done. Next, required B, prepare a COGM schedule and income statement. Use the balances on January 1st and 31st below. Okay, now remember, guys, why is it important the 1st and 31st? Like, why do they tell that to you? Because you need to know the 1st is the beginning of the month and the 31st is the end of the, well, guys, in this case here, it's a whole year. But 1st is the beginning balance and the 31st is the ending balance, right? Beginning versus ends. Okay, that's why they give you the 1st and 31st, so you can know the difference between the beginning and the ending balance. Okay. Also, they tell you revenues for the year are 1,360,000. Okay, so without further ado, let's go prepare our COGM schedule and our income statement. Now, maybe some of you are going to want to go and do the income statement first, right? So let's do COGM schedule. Let's just put it here. Let's write COGM, and then let's go put IS over here. So maybe some of you are going to want to go do the IS first, right? Sales minus COGS equals gross profit, right? That's not what it looked like in theory video, right? But maybe you guys are like, oh yeah, I want to go do the income statement first. Guys, remember, you can't do the income statement first. All right, you can't. The reason why, guys, is that you need the COGM schedule first. Because, guys, let's actually do it in like a 3-step approach, a little bit different than the theory video, right? You have your COGM schedule, you have a COGS schedule, right? And then we have the income statement, right? Because if we're going to do the income statement and make it look nice, like sales minus COGS equals gross profit, we need to make sure we have cost of goods solved, right? Now, to solve for cost of goods sold, right? Now, like I said, guys, to solve for cost of goods sold, you take your beginning finished goods plus your COGM minus your ending finished goods, and that's what gives you COGS. Okay, lately, guys, I know in the theory video, I just did the income statement in one shot where like I put this within the statement. Lately, guys, to be honest, I actually like breaking up a little bit more. Okay, I like putting it like this just because it makes your income statement look a lot more clean. So I kind of do it in like 3 steps. I do my COGM schedule first. I let that COGM at the bottom feed the COGS, and then the COGS schedule feeds the income statement. I find it much better like that personally. Okay, so needless to say, guys, let's get into the COGM schedule so we can figure out the COGS. Because as you can see here, guys, you can't get the cost of goods manufactured calculated without knowing the COGM. Okay, so going through this, guys, first off, in our cost of goods manufactured schedule, what does it look like? Well, you take your beginning direct materials, guys, and by the way, in my videos, I'm the biggest fan of abbreviations, which I encourage for your exam, by the way, as well, because especially for your midterm is going to be 50 multiple choice, 50 multiple choice, okay? So since it's 50 multiple choice questions, all right, I'm letting you know now, abbreviating is your friend, because in a multiple choice question, they don't actually grade you on your work, they just circle the right or the wrong answer. So understanding abbreviations and writing them down yourselves is a great way to save time and just great overall if you want to pass and finish the class. Okay, so beginning direct material plus the purchases of direct material minus the ending direct material. That's what gives you your DM used. Okay, now in this question, guys, they actually already give you the DM used of 460. So maybe some of you are wondering, like, oh, do I have to go do the beginning part? The answer is no. Okay, even though they give you the beginning DM of 40,000 and the ending as 50,000. Okay, you actually, because you don't have the purchases anyways. I mean, you could work backwards and figure out what the purchase is, but needless to say, guys, it's not needed. Okay, on the exam, if they give you DMU straight up, as a matter of fact, guys, I can show you what it'll look like, at least here. I did the full schedule just for the sake of it, just so you guys can see. But on the exam, just hypothetically, if you were to get DMU straight up, just write DM used, right? DMU plus DL plus MOH. Okay, literally like that. Actually, my pen, I actually don't like it like this. Let's go back to that one. So DM used plus DL plus MOH. That gives us TMC, our total manufacturing cost. Okay, so our DMU is 460. I don't care about the beginning or the ending balances because, like I said, guys, if they ever give you the used amount straight up, you are good to go. So 460, I believe the DL was, let's go look here. I had it 300, and then the MOH is 230. So 300, MOH 230. So that gives you a total manufacturing cost of 990. Okay, there we go. Next, guys, going through this here. After your TMC, you add your BWIP, which is your beginning work in process. That's all the material labor and you spent last period. So, guys, BWIP on the 1st of January was 10,000. You minus the EWIP of 14,000. And that gives you your COGM of 990 plus 10 minus 14, that's 986. Okay, now some of you are wondering, well, Matthew, in your theory video, I thought I saw total work in process here. And for that answer, guys, it's literally, the way I did in theory video was the technical, proper way to teach it, the way that'll work for your Wiley assignments. But truth be told, guys, on your exam, unless they ask you for total WIP, you don't need it, right? Like, you're literally just going to go do a total sum here for TWIP. That'll be like 1 million. And then just minus 14,000 afterwards. Like, the total WIP is a line that's not actually needed, right, for your statement. So like I said, guys, this is the statement. This is basically, like, the COGM schedule that you saw in the theory video is technically the correct one. But this is the one that you're going to use on your exams. For all intents and purposes, it's a lot less lines. It's a lot more efficient with your time. Okay, now, for your COGM, right, remember when your COGM is done, you cross the bridge because that's what's going to feed your COGS schedule. So we're going to put 986 over here. And then we're going to put our beginning and ending balances as given in the question. So your beginning finished goods is 100,000. Your ending is 150. So 100 plus 986 minus 150. What does that give you here? I believe that should give you 936. All right, 936, yes. Or actually, you know what? Let me just make sure my calculations here. Let me do it on my Excel right next to me. 100,000 plus 986,000. Take that. That's 1,086,000 minus 150. 936, yeah, perfect. So our cost of goods sold is 936. And let me put that in a different color just to keep things spicy. 936. And then, guys, for your cost of goods sold, you see how much more organized it looks? And then we'll go write the period expense right afterwards because maybe you're wondering, like, Matthew, where are the period costs? Did you forget about it? The answer is no. How could I forget about the period cost, guys? I want to be done with this class. Okay? Well, I mean, I'm already done with it. I've been done with it for too many years now. I've been teaching this. Okay? Next. Okay. 936. That is the cost of goods sold. Okay? Now, it's said to assume sales revenues of 1,360,000. So that gives us a gross profit of 424. Our period costs are where? 330. Okay. All right. Which just so happens to be the abbreviation of the next managerial accounting class, ACO 330. I have to go record that right after this, guys. Not too happy about that. All right. But as long as the teachers do not teach well, I have to keep tutoring until I become a teacher. All right. And then hopefully I'm better than that, than the current standard. I'm not pleased with the current standard of ACO 330. For those of you who are in accounting, you'll see me in the next accounting class. My voice is the voice of trauma, and it'll be with you until you get your CPA title if you're in accounting. If you're not in accounting, enjoy this, the one and done in Matthew. You are free. Okay, so 94,000. Sorry for the bad handwriting there. But yeah, your operating income is 94. So that's your COGM schedule and your income statement. Okay, so these are the basically two we need to answer. And my COGS schedule, I personally like just doing it separate, especially guys for like multiple choice, rather than just go doing a whole income statement. If they ever want to know just the cost of goods sold, you could just do this little schedule separately. So I feel like it keeps you more organized. Okay, next, prime and conversion costs. Okay, so first off, guys, prime cost, PC, conversion cost, CC. How do you calculate these two? Okay, and I hope you remember my trick from the theory video, right? Look at the top part of your COGM schedule, your TMC, right? Now let's go basically take that TMC and let's go put it rather from vertical. Let's just put it as an equation horizontally, right? So TMC equals DM used plus DL plus MOH, right? So I'm just taking that COGM schedule, and rather than writing it vertically, I'm just putting it horizontally, okay? Now, what is my trick? Maybe you remember from the theory video. The left-hand side of the equation is prime, and the right-hand side is conversion, okay? So all we have to do is that. We just have to break it up into two. So the prime is going to be 460 plus 300. So prime cost equals DMU plus DL. That is going to be 460,000 plus 300,000. Therefore, your prime cost is 760,000. That is your answer. And let's do the same with conversion. It is going to be the right-hand side of the equation, so DL plus MOH. So your conversion is your DL of Siri, leave me alone. I don't know if everyone sees the screen going on the side like that, all the colors, but Siri is not smart enough to do COM 305. Let's put it that way. Not smart enough to set timers for me, for Christ's sake. All right. All right. Now, going through this. Yeah, that's right. Leave me alone. See, now the highlights are stopped. We're good to go here. 5. Actually, I think it does timers pretty well. I forget. I remember asking it like the weather, and it was like, it gave me the weather in like some other country. I'm like, bro, where do you think I live? Fuck. Like, come on. All right. Like, how hard is it? Okay. How hard is it to tell where I live? You have my location, Apple. I know you do. Okay. Anyways, 530,000. That is your conversion cost. Sorry for ranting randomly about things, guys. Okay. All right. So that is required C. We have our prime cost and our conversion cost. And the big thing is, guys, just remember my trick with the TMC, and you'll be able to get prime and conversion on your exam. No problem. Okay. Next. And this is probably the hardest part of the question, guys, the cost estimation. Okay. So basically it says, suppose Bob were to produce and sell 450,000 units. What is the total cost per unit? Okay. So guys, this is probably the most challenging part of the video. Cost estimation, or maybe the most challenging. It really depends. Like the first part A was pretty tricky, but it really depends, guys, on how you are with math. Okay, now for cost estimation questions, what does that actually like mean? Okay, well, basically, guys, it's a management function or something that managers want for businesses, right? So businesses want to know what's going to happen to their costs if they make more or less units, right? So in this question here, we see here for all the costs above, this is based on a production and sales of 300,000 units, right? So the business just wants to know, well, what are going to be those costs at 450,000? Now, guys, if you're changing the amount of units that you produce and sell, right? You're changing that amount, okay? You basically need to know what costs are going to change, right? Because they're basically asking you, what happens if I make 150,000 more units than I anticipate, right? And for this, guys, it's very important that you understand the difference between variable costs and fixed costs, all right? Now, more specifically, guys, I have a very specific strategy to answering these types of questions on cost estimation, because this is going to come on your exam. They always ask this. It's a very big topic. Okay. All right. They always ask a few questions like this. So it's very important. You can put a little star next to it. Now, to answer these cost estimation questions, like I said, you need to know how variable costs and fixed costs work, specifically, guys, with the strategy that I'm going to show you how to solve the question. Okay. So whenever you have a cost estimation question, you basically need to build a cost function. Build cost function for business. Okay, you're basically going to build a cost function to anticipate the total cost. Okay, BUSIN. Pretty sure that's how you spell business. Okay, build cost function for business. All right, so guys, I live off autocorrect. So maybe you're wondering, Matthew, okay, build cost function for business. That is very vague. That tells me nothing. Okay, and for that, guys, I'm going to break it down even further. Okay, so we're going to figure out how to calculate the total cost for any business. Now, the first thing, guys, do we agree that the total cost is all the variable cost? It's the total variable cost plus the total fixed cost. Hope you guys agree with that, right? If we look here, guys, our costs, we broke them up as either variable or fixed, right? So the total cost is the sum of all the variable plus all the fixed, right? Now, the big thing is though, guys, we have to understand if we go from 300,000 to 450, because that's what this question is asking us, we have to know what costs are going to change. Now, do you guys agree that variable costs will change, fixed costs will not? Changes, no change. Okay, so therefore, guys, since the fixed cost, whether you make 300,000 or 450,000, we agree a fixed cost will not change, so I don't need to touch this. But I hope you guys do agree that the variable cost will change. Now the question is, how do I calculate the total variable cost? Well, to calculate the total variable cost, I'm taking my variable cost per unit times the number of units plus the total fixed cost. Okay. Now, going through this here, guys, when you're building the cost function for the business, okay? When I say this, guys, you're building the cost function based on 300,000. Let's put it like this, based on 300K. Based on original info. Okay, and now what do I mean by that? Well, we're going to build the cost function, okay, for 300,000 units, okay, because then, guys, we can know what to plug in as our number of units to get to 450,000, okay? And let me explain that again. We want to build our cost function based on the original information of the business, right? Because we need to understand here, okay? Well, what's the equation going to look like for 300,000, okay? Specifically, guys, the two elements that we need to calculate is the variable cost per unit. So whenever you're building your total cost equation, guys, you're basically calculating the variable cost per unit based on the original information in the question, and then the total fixed cost as well. All right, because these two functions will never change. Okay, and it goes back to what we learned in the theory video, guys. Remember, your variable cost per unit never changes. Right, that's the example, like the rate per hour. Whether you work 1 hour or 10 hours, you're still making, let's just say, $15 an hour, right? And your total fixed cost, that's not going to change, right? Remember the example with rent. Whether you have one roommate, two roommates, three roommates, the rent and toll that you're going to pay your landlord, okay, is fixed, right? It never changes. You still have to pay the landlord, let's just say $1,500 a month. So it never changes. Okay? So, guys, for this, all right, you basically want to find the variable cost per unit and the total fixed cost based on the original information in the question, right? You need to know what the business spends, right? Or these two elements at 300,000, right? Because whether you make 300 or 450, these functions will not change, okay? And if you don't believe me, guys, because the variable cost per unit, remember, guys, I said in the theory video, the variable cost per unit is fixed, right? Whether you work 1 hour, 2 hours, 10 hours, the variable cost per unit does not change, okay? So understanding that, guys, okay, for these cost estimation questions, I need you to build this equation that you see over here, okay? I need you to build this equation, right? Okay. And when you calculate these two values, you need to calculate it based on the original info. Okay. Based on info in question. Because, guys, I'm going to show you how easy these questions get afterwards. Like, I know it's a little bit hard at first, and we're going to do this a little bit actually in question 3 as well when we go to the high-low method. But just understand for now, guys, okay, we have to calculate the VC per unit and the total fixed cost, because look how easy the question is going to be afterward. You're going to see how easy it's going to be afterwards, because all we have to do, guys, is figure out these two elements based on the original question. And then, guys, for the number of units, we're going to plug in 450,000, and then we could calculate the cost at any level of activity, guys. So that's why we call it cost estimation, because when we build the total cost function, we can literally estimate any cost for this business, okay? Well, within the relevant range, we could guess any cost, but there's no relevant range given this question. We're not going to talk about high-low method now. You'll see that in the next question, okay? So basically, guys, for the business, we could calculate any cost, okay? All right, so that's what we're going to do here, guys. We're going to build the total cost equation to be able to calculate a cost based on any number of units that they give to us, okay? So first off, because we know the variable cost per unit will never change, right? We're going to figure out what is this variable cost per unit for the business. Now, guys, your variable cost per unit in general, okay, how are you going to calculate it? Well, you're going to figure out what's the total variable cost first, and then all you have to do is divide by the number of units. Okay, you'll see when we get to our review sessions or mocks, whatever you want to call it, you're going to see a little change up there that there's other ways they could give it to you and kind of make you mess around with it. But for all intents and purposes, guys, how do you get the variable cost per unit? You take the total variable cost and you divide it by the number of units. Now, guys, going through this over here, going through the variable cost, we see here that our variable cost is 960,000. Okay, so if your variable cost is 960, okay, based on the original information in the question, right? So to spend 960,000 in variable cost, we produced and sold 300,000 units, which gave us a variable cost of $3.20 per unit. Okay, then our total fixed cost, guys, right? There's literally no math to do other than just adding up the whole column, which we did. It's 360,000. So your total fixed cost is 360. Okay, now I'm going to build my total cost equation. So my total cost is my variable cost per unit of $3.20 times whatever number of units. Okay, and that'll give me my total variable cost, guys. That's why I need to figure out the variable cost per unit, right? Because if I go from 300,000 to 400,000 units, right, the fixed cost will stay the same. But this variable cost, and look at this over here. Let's actually erase some of this stuff just to make this more clear, right? So when we go to 300 to 400, this will be the same, right? Because the fixed cost is fixed, but this will change. So we have to understand, guys, that the variable cost is changing, not because the variable cost per unit, that always stays the same, but this variable cost is changing because the number of units does. Okay, so you always go build your total cost equation based on the original information, right? You see basically how they spend money, right? How they got to this 300,000. You build the cost function and how they got to 300,000. Then guys, once we have this here, and let me go to my equation, let me show you how easy it is. Once we have the cost function that got them to 300,000, which is this, right? So the cost function for this business that got them to 300,000 units is $3.20 per unit times the number of units. So if you took times 300,000, okay, and if I were to go do this here, if I did, let's go do that for you fast. If we do 3.2 times 300,000, you guys will see here that we're getting a variable cost of 960 and then a fixed cost of 360, which will give us a total cost for the business of, let's go see here, 1,320,000, which will also match if you were to add all this up. You get 1,320,000. Okay, that's not a coincidence. Okay, so this is the cost function for this business, right? If you want to estimate the cost for this business, it's $3.20 a unit times the number of units, and then that fixed cost does not budge. So this is what I was saying before, guys. You want to build this function based on the original information in the question, because look how easy it is to answer the cost estimation question now. Well, now that we know the cost function for 300,000, okay, all we have to do, instead of plugging in 300,000 like we did just before, just plug in 450,000, right? So let's go do this here. So our total cost is our variable cost per unit of 3.2 times the new 450, guys. Okay, plus the fixed cost of 360,000. That will give you a total cost of, so all the variable costs, if you do 3.2 times 450,000, that'll give you 1,440,000. That's your variable cost, that's your TVC. And then your fixed cost is 360. So overall, guys, your total cost at 450,000 units is $1,800,000. Okay. Now, I just did a lot of ranting there, but is that the answer to this question? The answer is no. It is not, unfortunately, the answer. Okay. Because what's the question asking you? It's asking for the total cost per unit. So what we did here, guys, we built a cost function to figure out the total cost of 450, but the question wants the total cost per unit. So guess what you have to do, guys? Work your math skills. If you ever have the total, is there a way to figure out what it costs you for each unit? The answer is yes. All you have to do is divide by the number of units of 450. So guys, if you spent 1.8 million and that 1.8 million was the result of 450,000 units, all you have to do is divide by the number that got you there. So we take 1.8 million, we divide by 450, and that will give you $4 a unit. And that is your answer. Okay, I wrote 4,000, whoops, $4. Let's just write here 4.00 is what I was going to write. Actually, let me just check my Excel, make sure there's no rounding here. Give me 1 second. Yeah, we're good. $4 on the dot. I love clean numbers. Okay, $4. And that is your answer to this question. The cost per unit, if you were to make 450,000 units, your cost for each unit, your total cost is $4, okay? Because the total is 1.8 million, and that 1.8 million comes from 450,000 units, okay? So guys, sorry for a bit longer of a recording. This was a very long question, so naturally it took a little bit longer, and I had to explain you guys things that you will see in later videos, as well as in our exam reviews, okay? Or mock exams, whatever you want to call them, okay? So guys, as always, I hope you enjoyed the recording. Let me know if you have any questions, and I will see you in the next video. Take care.